What if we apply the legendary Michael Burry's investment principles to analyze the stock performance of GameStop? Ready? Let's start. Analyzing GME through the lens of Michael Burry's investment principles involves looking at a company's value, financial health, and the potential for operational improvement. Valuation. With a high forward PE ratio of 120.42 and an EV/EBITDA ratio of 404.24, GME appears overvalued based on earnings, which would typically not meet Burry's criteria for an undervalued investment. At 0.72, the price-to-sales PS ratio is more modest, suggesting that the company's stock might be more reasonably priced in relation to its sales. GameStop has a positive free cash flow, which is a positive sign. However, the PFCF ratio is high at 38.54, indicating that the company's cash flow is being valued at a premium. Financial health. GameStop has a current ratio of 1.65 and a relatively low debt-to-equity ratio of 0.49, indicating a solid liquidity position and manageable debt levels. This aligns with Burry's preference for companies with strong balance sheets. The net cash position of $595.30 million or $1.95 per share is a strong point, suggesting that GameStop has a buffer to withstand financial difficulties. The negative operating margin and net profit margin indicate operational challenges. Burry often looks for companies that are facing temporary issues that can be resolved, leading to a revaluation of the company. Management efficiency. With an asset turnover of 1.88 and inventory turnover of 4.02, GameStop is effective in using its assets to generate revenue. However, operational improvements may be necessary to translate this into net profits. GameStop's revenue has been declining, which is a concern. Burry might look for a strategy or change in operations that could reverse this trend. Market sentiment. A very high short interest of 19.67% shows that a significant portion of the market is betting against the stock. While this could potentially set up a short squeeze, as seen in the past with GameStop, it also indicates widespread skepticism about the company's future prospects. The 52-week price change shows a significant decline. Burry might see this as an opportunity if he believes the market has overreacted and there's intrinsic value not reflected in the current price. In conclusion, while GameStop's financials show a company with a strong balance sheet and positive cash flow, its high valuation ratios and negative profit margins may not align with Burry's typical value investment criteria. However, if Burry identifies a specific catalyst that could unlock value or if he believes the company's operational issues are temporary and fixable, he may consider it an attractive investment opportunity. Additionally, the market's negative sentiment, as shown by the high short interest, could present the kind of contrarian opportunity Burry has capitalized on in the past.